And a quick reminder, none of this is financial advice. This is just what I am doing with my money inside of ULTY. Welcome back, Dividend Stackers. I know it's been a while since I uploaded an ULTY YOLO video, but today we are officially bringing the journey back, or as much as I can actually post. It's been crazy, a lot of work, a lot of stress, and the market wasn't doing so great. But before we get into anything else, I want to make sure one thing is very clear. I did not sell my ULTY. The position is still here. The experiment is still live. The dividends are still coming in. And even though the market got rough, ULTY got hit and my portfolio definitely went through some pain, I am still holding. Now, I know some people probably looked at ULTY over the last couple months and thought, man, that ULTY YOLO probably got out. Nope. Still here, still holding, still collecting, still tracking the real numbers. And that is what this channel has always been about, not pretending everything is perfect, not hiding when the position is red, not only showing the good weeks, but showing the actual journey of what happens when someone tries to build high yield dividend income strategy in real time. And let me say this right away. This is not financial advice. This is for entertainment purposes only. I'm not telling you to buy ULTY, Chippy, AMD, Amazon, or anything else I talk about in this video. I'm simply showing you what I am doing with my own money inside of my portfolio and how I am thinking through the strategy. So today we are going to go over where ULTY portfolio stands, how much I have collected in dividends, and what my true gain looks like when dividends are included, why I have not sold, what my long-term goal still is, and how I am building around ULTY with other dividend paying stocks and ETFs. And yes, I am also going to be honest. Do I wish I would have put my money into Chippy instead? Yeah, a little bit. Actually, maybe more than a little bit, but it is what it is. We cannot go back and buy the perfect chart after it's already moved. We have to manage the position we actually have. So let's get into the numbers. All right, so here is where ULTY portfolio currently stands. As of this update, ULTY is trading at about $31.68. I hold 336 shares, a little bit more than that. The market value of ULTY position is sitting at $10,665.49. And my cost basis is at $17,293.77. Now, if you only look at that, it looks ugly, and I am not going to pretend it does not. The unrealized loss is currently a negative $6,628.28, which is about a negative 38.33%. That is real. That is the part that people love to point out when they say, see, these high yield ETFs do not work. And honestly, I get it. If you only look at that price chart, or if you only look at the unrealized loss, it does not look good. But this is why I built the spreadsheet the way I did, because with a fund like ULTY, the story is not only the share price, the story is the share price plus the dividends. So far, ULTY has paid $5,356.86 in lifetime net dividends. That means when I include the dividends I have actually received, my true gain is not negative $6,628. My true gain, including dividends, is currently a negative $1,271.42, or a negative 10.65%. Now, let me be very clear. That is still red. I am not celebrating being down, but negative 10.65%, including dividends, is a very different story than a negative 38.33% if you only look at the unrealized loss. And this is why the whole reason I track ULTY this way. Because if you're investing in something like ULTY, you cannot only look at the chart and ignore the cash flow, but you also cannot only look at the dividends and ignore the price loss. You have to look at both. That is the truth. So the big question is probably this: why didn't I sell? Why keep holding something that has been down? For me, it goes back to the original goal of the ULTY journey, or the ULTY YOLO journey, that is. The goal was never to treat ULTY like a normal stock. This was never the same thing as buying Amazon, AMD, Nvidia, or a regular company where the main goal is price appreciation. ULTY is different. ULTY is a high yield option income ETF. The goal is cash flow. The goal is to collect dividends. The goal is to track whether those distributions can eventually pay back my original capital over time. That has always been the experiment. I want to word this carefully because I know people like to argue about this in the comments. My goal is to eventually collect enough dividends from ULTY to recover all my original out-of-pocket capital Once my cumulative dividends equal the amount of actual money I put in, then from a cash flow perspective, I would consider my original capital recovered. And after that, any additional dividends would basically be house money. Now, does that mean this position cannot go down? No. Does this mean ULTY is guaranteed to pay me back? No. Does that mean NAV erosion does not matter? No. It absolutely matters. But that is the experiment. Can the income stream keep paying long enough for me to recover my capital and then continue collecting after that? That is what I am trying. That is what I want this channel to show in real time. And that is why I did not sell. Because if I sell during the ugly part and the experiment is over, I lock it in, I walk away, and we never actually see how the full income journey plays out. So yes, the position is down. Yes, I wish the chart looked better. Yes, I wish I had put more money into Chippy instead. But I am still holding ULTY because the original goal has not changed. Collect the dividends, track the real numbers, recover the capital if possible, then let future dividends become pure cash flow profit. That is the plan. Another reason this matters is because we are getting close to 1 full year since the journey began. And honestly, that is crazy to think about. When I started this, the idea was simple. What happens if I go heavy into ULTY, track the dividends every week, reinvest where I can, and show the real performance over time? Not just the good parts, not just the flashy yield, but the actual performance, the cost basis, the market value, the dividends received, the unrealized loss, the true gain dividend, the margin, the taxes, all of it. And now almost a year later, I can say this has not been a smooth ride. There were weeks where the dividends looked great, and there were weeks where the price action looked terrible. There were times when the broader market was weak and ULTY got hit along with it, and then some. And I know if you've been following ULTY, you've probably seen that yourself. And then there's definitely moments where I looked at Chippy and thought, man, I wish I would have put my money over there. But that's investing. There's always going to be something that performed better. There's always going to be a chart you wish you owned instead. There's always going to be the trade that looks obvious after it already happened. The real question is not whether I picked the absolute best ETF of the last year. The real question is whether I can manage the strategy, keep tracking the numbers, and build around it in a smarter way going forward. And that is what I am doing now. And my current strategy, so here's what I've been doing differently. Instead of trying to time perfectly entries, I have been dollar cost averaging daily. Right now, my strategy has been to add $5 per day into every stock or ETF I am holding, and I want to continue to build. And I actually like this because it solves one of the biggest problems investors have: emotion. When prices are low, you feel scared. When prices are high, you feel like you missed it. When the market is dropping, you want to wait. When the market is ripping, you want to chase it. Dollar cost averaging helps remove a lot of that emotion. If the price is low, I buy it. If the price is high, I still buy it, but I am only adding a small amount. So I do not feel like I miss all the low prices because I was buying on the way down. And I do not feel like I overpaid all the highs because I'm not throwing a giant lump sum in at one time. I'm just saying consistent, $5 here, $5 there, every day, position by position. That may not sound like much, but over time, consistency adds up, and mentally it helps me stay in the game because instead of trying to predict the exact bottom, I am building positions slowly. That is the strategy. Now let's talk about the part that some people are probably going to have questions about. Yes, I am still using margin, and I want to explain exactly how I'm thinking about it. My strategy is still similar to what I've talked about before. I deposit my whole paycheck into the portfolio. That keeps my capital inside the account and allows the portfolio to build and keep building. And then when I need to pay bills, I use margin. So instead of pulling cash out and stopping the compounding process, I keep the portfolio invested and manage my cash flow through margin. Now, let me be clear, this is not risk-free. Margin is dangerous. If the market drops hard, which we saw just happen just about 2 weeks ago, it was down hard. Margin makes the pain worse. If interest rates stay high, the margin cost matters. If someone does not have stable income discipline and a clear plan, this can go bad fast. So I'm not telling anyone to copy this. I'm just being transparent about what I'm doing on my dashboard. The margin is used. It's currently around $14,617.39. The estimate daily interest is around $1.87. So I'm tracking that too because margin interest is real. It is not free money. It has to be included in the strategy, but for me, the way I look at it, is this: if I can keep adding capital, collecting dividends, keep managing the risk, and keep the portfolio growing over time, then the margin becomes a tool. But if I get reckless, overextended, or ignore the risk, then margin becomes a weapon pointing at. So the key is discipline, and that is why I want to show it on the channel, not to flex, not to act like this is easy, but to show the real math behind the strategy. Now, another thing I'm gonna start doing more is showing my full portfolio through Blossom Social, because I know the channel is called the ULTY YOLO, and ULTY is still the main experiment. But the truth is, my portfolio is becoming bigger than just ULTY. I still want to make sure to be in the income engine, but I also want to be transparent what other things have. And if you ever wonder if I sold my ULTY, this will tell you. You have to go in there. I do not have the paid subscription, so if you want to pay for it, the link is in the subscription below for the buy me a coffee. I'd be happy to do that, but it's just more for transparency. I also want to build other positions that can help the portfolio grow, pay dividends, and give my exposure to different parts of the market. And you can see it. For example, I've been happy with the names like AMD, Amazon, and actually let me click that over here. You know, AMD and Amazon have been moving. AMD gives me exposure to semiconductors, AI, and high performance computing. Amazon gives me the exposure to cloud, e-commerce, advertising, and long-term tech growth. And then something like Chippy gives me exposure to the semiconductor income theme, which has obviously been performing very well lately. So when I show the Blossom Social portfolio, I want you guys to see the full picture, not just ULTY, not just the red, not just the dividends, but the entire strategy, because the real goal is to build a portfolio that has multiple engines. ULTY for high yield income, Chippy for other high yield incomes, for sector-based dividends. I also had the NEOS, some of the NEOS funds, and also T-SPY, SPY-Y, Devo, and GPIC, and to name some, and some of the other semiconductor ones that I have been showing on there. So that is just for transparency, so you can see a lot of it has been doing pretty good, and I am very happy with that. Most of the semiconductor ones have been doing really good, and Amazon and Chippy and SMH, Google, have all been kicking butt, which has been also so good. So I'll share it here as far as all-time return. You can see there where we stand there. AMD is gained 66% in my portfolio alone, and IOQ 36%, Amazon 24%, and so on and so on. And Chippy has been at 13%. I really wish I would have put it in there. It would have been called the Chippy YOLO. Man, that would have been nice. An MLPI, actually, I had added that earlier in the year, I think it was about February, right before the market crashed. And it had been doing pretty good, still paying dividends there. I'll share that in another video, only because I think this one might get too long, and it's just a welcome back for me here. I have a little bit of Bitcoin there. I'm more Bitcoin in my other portfolio. And the same thing with what is the other one I have there? XRP, actually, I've been growing on here because I can dollar cost average there to $5 a day. Who knows? It may go somewhere. If you ever want to go in there, you can definitely see that. You can see my portfolio if I go here, and you can see there what the actual portfolio is. Now, I will say, when I was looking at this earlier, it kind of looks kind of weird. It shows a little bit more of my portfolio value than what I actually have, and my all-time return obviously counts the ULTY. But this looks a little bit weird here. If I show you here, it actually shows me, and let me actually see if you guys can see that. Yep, you guys can. So let me move it over here. There we go. It actually shows a return of a negative $107 and a negative 49% there. So it showed my dividends a lot more. I'm going to go into my calculator and calculate that. I know I don't have, according to my calculator, I'm not there. But if that is the case, wow, that would be nice, right? That would mean that my portfolio has almost performed as good as I thought. I'm sorry, not as good as I thought. Way better than what I thought, and not a negative 10%. So, but if anybody has seen this, let me know, because that completely is different than what I've been tracking. And so I'll get back to you guys on this, because it doesn't seem that way, obviously. But I have been not reinvesting all of the dividends into ULTY, only $5 a day, just so I can dollar cost average and everything else goes everywhere else. I do believe you can see here my daily buys. Yeah, I don't want to try that for free. Anyways, that's what it shows on here. So it'd be interesting to see how that actually has been. I'll have to go back and count all my dividends, because that's not the dividends that I have. I only have, what was it, $6,000 in dividends, or $5,000 the dividends that I have been holding. The dividends that I've received back is 6,600, and I have my calculation as far as my loss at 5,300 in dividends, and my total loss 6,600. And this shows my total loss at 7,200 and my total dividends at 7,095. And maybe this calculates it better than my tracker, I guess. But that was a little surprise there. If anybody sees that, maybe we should stop using the tracker, and maybe we should start using a Blossom. I'll pay the $8 or something like that it costs there, and I can share it there. But yeah, so that's that. Now, I also think it's important to talk about the market overall, because over the last couple of months, it was not just ULTY that got hit. The broader market had weakness too, and a lot of people were feeling it. Growth stocks pulled back, high yield funds pulled back, risk assets got pressured, and when that happens, something like ULTY can get hit even harder, because it is really already a high yield option-based product. And even then, ULTY was doing pretty good at the start of the year. It was beating the S&P 500. I have to check if it's beating it still today. When I checked yesterday, it had pulled back a little bit, but the S&P SPY QQQ have just blasted. I feel bad for anybody who shorted that. I know there's another channel that I watch, and they shorted it right before the gap, right at the 200 MA or EMA, whichever one it was. Still, that was about 60 points ago on SPY, and probably about 100 points ago in QQQ. So that was pretty bad there. So feel bad for that. I mean, we all make I wouldn't say mistakes, but we all gamble a little bit there, and that was actually a pretty good setup, I would think, but it just didn't play out the way it is. I hope he just got out of it and didn't stick through it like I am with ULTY. But tech has been stronger. AI related names are still getting attention, and some of my other holdings have helped the portfolio recover. That does not mean that we're completely out of the woods, and it does not mean anything and everything goes straight up from here, but it does mean the environment looks better than it did during the worst part of the drawdown. And that is why I feel like this is the right time to bring some of my updates back as I have time. But I can't promise you anything. I mean, I wish I could. I was hating it every single week for a long time there, even through the down time. So I don't want anybody to think, or just seeing it, that's why it stopped. That's not why it stopped. But we are not starting, I'm not starting at a perfect place here. We're starting from a real place, and ULTY is still down. At least for me, it is. If anybody got in during the drawdowns or earlier in the year, put in the comments. I mean, you must be doing pretty good right now, especially put a big chunk in there. That must be nice there. The market has recovered some, so the portfolio is still alive for me. And now I continue to get to track what happens next. Not that I haven't been tracking, I just haven't been posting it. So follow it on Blossom there and see what happens there on these ones here. So the tag there is at ULTY_YOLO. So what is real recent, almost 1 year into this journey for me, is this high yield. It's not magic. Dividends are powerful, but they do not erase risk. Big distribution does not automatically mean you're winning. You have to track total return. You have to track cost basis. You have to track taxes. You have to track margin. You have to track whether the income is actually moving you closer to the goal. That is why I do not want this channel to be one of those channels that just says, look how much I got paid this week, and ignores everything around. Yes, the payment matters, but the full picture matters more. If ULTY pays me $53.56 in dividends, then that matters. But if the position is down 6,600, that also matters. Both things can be true, and that is the whole point of tracking true gain, including dividends, because I want to know the real answer. Am I actually ahead? Am I still behind? How much capital has been recovered? How much has been paid before the experiment becomes house money? Or how much more needs to be paid, right? That is what I care about. So going forward here, the plan is, number one, I'm going to keep holding ULTY. I have not sold, and unless something major happens, I'm going to keep collecting the dividends and tracking the position. Number 2, I'm going to keep updating the spreadsheet. That means market value, cost basis, dividends received, unrealized gain or loss, true gain, including dividends, margin, and taxes. And number 3, I'm going to start showing more of the portfolio. That means Blossom Social updates, daily buys, dividend stocks, income ETFs, growth stocks, and whatever else I am building. Number 4, I'm going to keep dollar cost averaging daily. Right now, that means adding around $5 per day to each position I want to build. And number 5, I'm going to keep being honest. If ULTY is down, I will show you. If Chippy is doing better, I will say it. If the strategy is working, I will show you the numbers. If the strategy is struggling, I will show you that too, because that's what makes this journey valuable, not perfection, transparency. So everyone who has been following the ULTY YOLO journey, thank you for sticking around. I know I've been gone for a bit. Life got busy. I didn't have time to make videos the way I wanted to, but the portfolio did not stop. The dividends did not stop. The experiment did not stop. And now a little bit back. So let me know in the comments, are you still holding ULTY? Did you sell? Are you buying Chippy? Are you building other dividend positions? Or are you staying away from these high yield ETFs completely? I want to know, the Dividend Stackers, what are you doing right now? And if you enjoy real portfolio updates, tracking high yield experiments and honest numbers, make sure you like the video, subscribe to the channel, and follow along, because we're going to keep tracking this journey week by week. Again, none of this is financial advice. This is just what I am doing with my money inside of ULTY. ULTY YOLO is back. Dividend Stackers, I appreciate you. And as always, ULTY YOLO out.